Thanks, everyone.
All the best, guys.
Thank you.
All right, we are live now.
Boy, we went live and now suddenly everyone's so quiet.
Hello, everybody. Thank you for joining today evening. We will get started in a minute. So while we are waiting, let's watch this quick green cell video, and that will give folks time to join in, and then we'll get started. Okay. Hello, welcome everybody. Thank you for joining us this evening. This is our first webinar of the year. That was a quick video showing what Green Cell does. Green Cell is a non-profit organization that is passionate about raising awareness of environmental issues, and we promote sustainable solutions. So in the video, you saw some of the projects that we do. We will talk more about them towards the end of our webinar today. So in short, our aim, our mission is to help everybody go green. As part of that mission, here are some of the things that we did last year. So our food rescue team rescued over 10,000 pounds of food from going to the landfill. We rescue this food and take them to the food pantries for distribution further. We did electronics recycling, glass recycling, rescued 2,000 pounds of medical supplies. These rescued medical supplies go to hospitals in US as well as in other countries where there is desperate need for these medical supplies. We do a lot of composting. Our volunteers are amazing. Last year they put in over 10,000 hours of volunteering time. So thank you to all our supporters and volunteers for 2021. We are working on making much more progress this year. So if you are interested in any of these projects or something like this, do join us. So today, this is our webinar. Some of our past webinars have been on topics like composting, solar energy, rainwater harvesting. We have our webinars every second Sunday of the month, and our past webinars are on our YouTube channel. So if you want to catch up on any one of them, you can go there. Housekeeping rules for today. So we request all our attendees to be on mute. We encourage you to have your videos on. So our presenter today is keen on having a conversation with you, a dialogue with you. So please have your video on if you can. We will be collecting all your questions on the Zoom chat, as well as people who are watching on YouTube. Please keep posting your questions. Our volunteers are collecting them. We will bring back those questions to our presenter and try to get them answered. If your questions are not answered, or if you have further questions, please do email us. Our email is greencellatl@gmail.com. You can send us an email and we'll get you the answers to your questions. So our today's webinar is about investing in a sustainable future. We will be talking about how your investing dollars can not only be purposed for your retirement, for your investment goals, but they can have another purpose, which is you can make your dollars talk or have a say in a sustainable future. And for that, we have today, our speaker is Nancy Sagar. Mm-hmm. She is the president and co-founder of Brighter Investing Public Benefit LLC. Brighter Investing is a financial advisory firm specializing in sustainable and impact investing. They work every day with investors to direct their hard-earned capital towards solutions for the issues they care about. Nancy is an alumni of University of Michigan. She has an MBA from UCLA and is really active in multiple sustainable and environmental organizations. So without further ado, handing it over to you, Nancy.
Wonderful. Thank you. And thanks everyone for joining us today. I'm really excited to talk about this. It's so important to get out and talk about the things that we're passionate about, and what your group has accomplished since you were founded just really astounds me. I love your model of working together. It is so much more impactful when we do that versus just, one person wondering, oh, what should I do? Like, can I really make an impact? Well, yes, you can, but you can do it even more with your friends, your colleagues, your community. We all have a voice, and we're going to talk about a way that you can really amplify your impact. The things that you do every day are great and so important, but there's an even bigger thing that you can do and that is to invest sustainably. And there are lots of benefits to doing so. So I am going to share some slides here. And I really do encourage you to turn your cameras on and jump in. I'm going to ask you a few questions along the way, and so hopefully you won't feel too shy about answering them. My first one is, does anyone want to share why you think this is important, or what made you want to show up on a Sunday afternoon to talk about this topic? Anyone?
Please feel free to unmute yourself and let us know what was your interest in joining today, or what are you looking for today. So, yeah.
All right, I'll unmute.
Yay.
I'm David Hensher. I'm actually calling in from Philadelphia. Ramya Shivkumar is a colleague of mine with Windward Engineering there in Atlanta. I was interested to learn more about this because I actually did early last year shift all of my personal retirement investments into things that were on this website, Fossil Free Investments, to make sure that what I'm investing in is not contributing to investing in fossil fuel industry, but it also hits on a variety of other things. So I was just joining this really to learn if there are other things that I'm not aware of, and then hopefully Ramya and I can bring these things back to our practice to see if we can get some of these types of investment options available to our teammates.
Thank you, David. That's fantastic. I love the fact that you've started this already, and I think you meant fossilfreefunds.org. Does that sound right?
Yeah, I was going back to the web, so I had shared this with. Let me just go back. I had fossilfreefunds.org.
So that is a fantastic organization, and we are going to take a look at fossilfreefunds.org in a little bit. So wonderful.
Right. Does any one of the Green Cell volunteer want to jump in? Because I see lot of the Green Cell volunteers online. Like what made you join this call today, or what are you looking to learn from this call?
I can go next, Pankaj.
Go ahead, Ganesh.
So, for my investing journey, I started really, really late, right in my 40s, which is when I realized, oh, I got to catch up. I had to save for retirement. And then I discovered index funds and the total stock market funds and all that. So these days, I've been passionate about getting all the youngsters to invest early, and even my friends and everybody to start thinking about investing, because most are not as knowledgeable about them, and they're not taught about these. And then the reason I'm here is because I want to slowly move towards ESG type investing. I'm thinking that there must be an easy way to jump from here to there, but with a focus on these kind of passive investing approaches. Then I don't want to have to do day trading or try to figure out what stocks to invest in. So that's my intent. Hopefully I can take that knowledge and try to spread the ESG type investing to my friends going forward.
Wonderful, thank you. We are going to talk about ESG, and the point that you made about we're not taught any of this in school. I have an MBA, and we never took personal finance classes. I mean, I can tell you about the weighted average cost of capital, but in terms of investing for myself, I've never had a class in it. So or formal class in it. It's so important for young people to understand. So hopefully, you'll be able to get your kids interested in this. And hey, I do investing 101 presentations. So the earlier, the better. That is the regret that so many of us have. It's like, oh, if only I knew. All right. Well, I think with that, let's jump in and talk a little bit about the power that we hold together as a group, as a village. The market is the most powerful and malleable institution on earth, and consumer demand powers 70% of our GDP. And when people start caring, when they start voting with their money and investing in leaders versus laggards and buying from leaders versus laggards, those companies need to evolve in order to meet our demand and what we want. Is there anyone on this call that hasn't been to a Blockbuster in their life? Anyone young enough? Well, but when consumer demand changes, evolve or die. And we don't need to be investing in companies that are polluting our air and our water and driving temperatures to 3 degrees or higher. So we've already seen in the work that you're doing with GreenCell that together you can accomplish a lot. And so, one of the things you've done is to band together on recycling. So I used the EPA's calculator to see how much CO2 you guys save by recycling. And so this is for a family of 4 in zip code 30097. I hope that's accurate for many of you. And this is just recycling waste. But hey, how much CO2 do you save? Well, it turns out you save more than half a ton in a year. And does that sound like a lot?
It does, right? Compared to how much like what your consumption is and what you can do with recycling properly. So I think it's a start. If everybody does that or starts doing it, the impact can be bigger, but not a lot of people do this.
Right. Well, let me give you a little comparison here. So that 1,164 pounds or 0.582 tons is like saving 59 gallons of gas or planting 13 trees. So does that change anyone's perception of whether that's a big number? It did change mine, and it sort of felt like, when I send out birthday gifts, I plant 20 trees, and that's a lot of effort for 13 trees. But here's the thing, is that together, those small actions add up. And so you together doing this in your communities, let's say you got 100 of your neighbors to do it, and over 5 years, you're talking about much bigger numbers. That's how we drive change. But there's a much bigger way that you can make a difference both individually and collectively. And so I'm going to start this story with your total carbon footprint for your family. So for family of 4 in that zip code, on average, generates 86 tons of CO2 per year. And that's a big number.
Yes, and now when you see that half a ton of saving from recycling with respect to this 86 tons, that it looks small, right? It's such a small impact for doing something right every day.
That is true. But the thing is that we need everyone doing lots of things, maybe imperfectly, but rather than a few people doing things perfectly. We are at a point now where we need to do everything that we can, and that counts. That counts. And but you have a much bigger lever that you can use that will exponentially improve your CO2 emissions. So this is an important concept to recognize, and it's that your footprint is going to rise or fall based on your income and wealth. So, wealthy countries generate more CO2 equivalents, and it demonstrates that the most fortunate among us have the greatest opportunity to make a difference. And that's where sustainable investing comes in. So this is a discipline with many names. It creates lots of confusion. There isn't really a common language. So it's really great to start with just what's the definition of sustainability. And Investopedia defines it as meeting the needs of the present without compromising the ability of future generations to meet their needs. It might surprise you that sustainability was originally a finance term until it was adopted by the environmental movement. So, preserving our children and their children's ability to meet their own needs, we are not on track for doing that. So of the world's public companies, there are more than 9,000 of them, they are taking us to a 3-degree world. This is as of data as of about a month and a half ago. So the estimated temperature rise from all those public companies is +3. There are 43% of those companies are on track to keep us to 2 degrees. 57% are not. And we know that to avoid the worst of climate change, we need to limit warming to 1.5 degrees or less. And only 10% of companies are on track for that goal. And this is across all regions, in all industries. They are misaligned with our climate goals. And here's proof of that. Here are the breakdowns by sectors. And green is good, yellow and red is bad. And the good news is that we see green in every sector. Now, some a lot more than others, but we also see yellow and red in every sector. Only these bottom 4, real estate, healthcare, financials, and communication services, have more than 50% green. So they're the ones keeping us below 2 degrees. Then we have industrials, consumer staples, and information technology that are between 2 and 3. And then we have our energy, materials, utilities, and consumer discretionary, who are taking us to above 3. We can see materials at 4, and we can see energy at 6.5. And by the way, that is fossil fuels. So to reach net zero by 2050, all of this red and yellow the companies that are red and yellow need to decarbonize. And that is going to be a lot of work that is not directly tied to revenue, a lot of expense, a lot of time, and a lot of risk that they are facing while they are making that change. So which companies seem to be in a position to grow and thrive in a low carbon world? Now, I'll just answer that question. I would say the companies that, or the industries and the companies that are green, they have an advantage because they are already moving, they are already leaders versus laggards. And speaking of risk, Larry Fink, the CEO of BlackRock, which is the world's largest asset manager, he's been warning CEOs of public companies about the risks associated with climate change. Every January, he puts out a letter. I'm sure the letter is probably coming out tomorrow. But last year, he flat out said that climate risk is investment risk. And he points out that sustainability affects economic growth and asset values and financial markets. So whether investors really care about sustainability or whether they really don't, they have a reason to care because this is a way to protect themselves from risk. We saw the risk of temperature rise, but guess what? The world's largest mutual funds are chock full of fossil fuels and sustainability laggards. So here we see Vanguard and Fidelity's largest mutual funds. I'm sure some of us out there, well, I don't, but I'm giving this talk, so I would hope not. But some of you probably own some of these funds, and they are chock full of fossil fuels. We've got C's, D's, some B's, and some pretty significant carbon footprints. If you own these funds, you could be multiplying your carbon footprint beyond that 86 that we calculated earlier. By the way, and who doesn't own an S&P 500 fund? So here are the largest on the planet, and you know, even though ExxonMobil got kicked out of the S&P 500, it still is all these index funds are still getting D's, F's, and there are a few C's. So, you know, the S&P 500 is has a very large carbon footprint. So here's where sustainable investing comes in. Back to our family of four in Johns Creek. For the purpose of this exercise, I said, okay, let's say that they have a total of $1 million in their various 401ks, their IRAs, their other types of accounts. And then what we do is we evaluate just the equity portion. And so we assume that they were 70-30, 70% in equities in a well-diversified portfolio with funds or stocks in all of these different categories. This is really important to diversify this way. And by the way, if $700,000 and $1 million sounds freakishly high to you, don't worry, because all of this scales. It just happened to be a convenient number for us to use. So I started with an unexamined portfolio and put the world's largest mutual fund, or ETF, in each of these categories into this portfolio. And oddly enough, it turns out that it generated 86 tons of CO2 a year, the same as the family of four in Johns Creek.
So
Yep.
Nancy, I have a question here, right? So let's go in a step deeper here. So we are saying a family of four living in our area, they generate about 86 or 83 tons of carbon per CO2 per year. That's from their living style.
Yep.
But if they are invested 70% in equities, right, and with an approximate number, their investments are generating another 86 tons of carbon, right? So your total footprint, your total footprint when you're counting, don't just count your lifestyle, also count the number because of your investing.
Yes, thank you for clarifying this. This is the idea that your investments can multiply what you're doing at home every day.
Right.
By the
right.
way, we can improve on that 86 at home too, which we're going to see in a second.
Yeah. Yeah.
Okay.
So,
So,
and
go
this
ahead.
was sort of a eye opener for me, and that's the reason, like I brought it up, that my impact has suddenly doubled now, right? Or my family's impact is suddenly doubled, and I'm trying to tie it back to that recycling example, right? Like you recycle properly every day, and you save half a ton of CO2. But now you are going to show us how we can have a bigger impact by changing our investments. And will that let's proceed and see what we can do with our investments here.
Well, if I replaced all of those world's largest funds with sustainable versions that are popular with our clients, we would save 61 tons.
Wow.
61.
So that's like recycling for 120 years.
I'm sorry? Yeah.
That's like recycling properly for 120 years, right?
But
That's
we
the
need
sort
to
of
keep recycling. We
yes,
need
yes,
to keep recycling. Yes, we need to keep doing all of those things.
Right,
And in
right.
fact, so here's where the other improvements we can make at home. So the 86 we see on the left here, and this was an exercise that I did with another family, and we said, okay, let's get 2 new electric cars, and let's put solar panels on the roof, and let's go vegan, and we're going to fly less and buy fewer goods. Services we couldn't really do much with, but certainly, clothing was a big one, and cut some furnishings as well. So by changing, and living more sustainably that way, they got rid of another 36 tons a year. So from 86 to 36, plus that other, 0.58 tons. And, you're also, you are composting, and you're reducing the goods that you're buying by sharing. So, but this is meant to show the kind of the scale of all of this.
yeah.
So you do all those things and you saved 36, but we swapped the portfolio and you saved 61.
Mm-hmm.
So that just shows you how important your investments are, and think about how valuable it is when you get your group together and say, we're going to do this, and that is what's happening in the world. And it's not just about cutting your carbon emissions; it's about investing in the future, because to get to this low carbon world, we have to reinvent everything. We have to reinvent the way we build, our transportation systems, our food system, the way we power everything. And that creates economic opportunity. So as this woman from BlackRock says, we think the benefits are going to the people who are the quickest at remedying their portfolio for the new era. And this is an advisor that we work closely with. They come out and say it: don't invest in companies that cause global systemic risks. Invest in the solutions. And that companies that are solving problems like climate change, resource degradation and scarcity, widening inequality, those are the greatest growth drivers and sources of wealth creation of the 21st century. So this is opportunity as well as risk mitigation. So I said this is something that's become very popular, especially in the last year, but it might surprise you to know that this is a $35 trillion industry. 36% of the world's assets are managed using sustainable criteria. And that's a lot, because that means that a third of the world's capital is unavailable to the companies that were, say, red and yellow, if they're doing it properly. And in the US, it's 17.1, but take a look at the growth in the inflows into US sustainable mutual funds and ETFs. When I quit my job at the beginning of 2018, because I learned about climate change, global warming, in an oceanography class at the University of Michigan in 1988. And I was absolutely horrified at what they were talking about just in the oceans. And when An Inconvenient Truth came out, I cried. I cry easily. I cry at a lot of things, especially about the environment. This is, something that I quit my job because I needed to make fighting climate change my full-time job. And this, to me, was the most important thing that I felt that I could do, because it has the most impact for the broadest range of people. So when my partner and I conceived of the company, 5.5 billion went into U.S. sustainable funds, and this last year, through the first 3 quarters, it was about 55 billion. So that's quite a leap, and that's really exciting, because the more money that flows in, the less that's available to those that are not contributing to the world that we want. So ESG, this is a very confusing topic right now. There are just there are lots of articles by journalists who are kind of misinterpreting the intent of ESG, and then there are professionals that are using it in the wrong way. In our view, my view, ESG is it's data. It is data that tells us how companies are preparing and performing in these 3 different areas: environmental, social, and governance. And alone, good ESG scores does not mean that a company is sustainable. And to give you an example, one of the strategies that we offer is the only strategy that is endorsed by the Sierra Club, only one in the world. And boy, they are tough. And there are 42 companies in that portfolio. And the chief investment officer said, here's the problem with ESG. I could raise the ESG score of this portfolio by swapping out Moderna, which is saving lots of lives, and replacing them with Exxon, who is not saving lives, because Exxon's ESG score is higher than Moderna's. So how could that be? How could that be? So there are a couple different things. Number one is that ESG is industry agnostic. It doesn't care what you do. All it cares about is these raw numbers that do tie to financial performance, but that doesn't mean that you're doing good for the world. As we've just discussed about ExxonMobil. The other thing is that every industry is graded on a curve. So we think back to college, most of your companies are going to be in that middle. And then we've got those on the far right and on the far left. And so you can't compare across industries, because what matters is their ranking within their own industry. So that is why ESG it's data, it's valuable, but it is not a proxy for sustainability. It can identify sustainable practices, and they're good practices that can help a company track sustainability. But again, it doesn't mean that the company is sustainable. Does that make sense?
So Nancy, I think this is where because the water is so muddied now, that things get complicated for common folks who are trying to do the right investment decisions, because I cannot just go and invest in an ETF or in a mutual fund that claims to be ESG. So there has to be some homework done, because now ESG being the buzzword, and as you showed in the previous slide, the 1/3 of the money is in ESG. Every company wants that money, right? So they are going to try and show how good we are at ESG.
Yep.
So you need that filter where you should be able to go through whatever is being whitewashed or greenwashed, and then figure out the right investments. Yes. So I think that is where it gets complicated. So if you can throw some light on that, like how to filter out, or if you are covering it in the next slides, we can talk about it later.
Well, this is an example of, it's not quite in the next slide, but what I will say is that, just like climate change and widening inequality and resource scarcity, there are no, magic bullets, easy answers. I heard a speaker say, when people ask her, what's the one thing I can do to fight climate change? She says that's the wrong question, because we all have to do a lot of things. So yes, there is a deeper dive that needs to take place before you just pick an ESG fund. But I'm going to show you some resources, and then there's a piece that you're going to send out after this webinar, and it's going to have some questions about, do you want a resource kit that has links to all of these different places where you can do this research, or come to a how-to webinar that goes deeper, or even my firm, we decided that everyone who attends this webinar, we will do an analysis on your portfolio. No strings attached. This is a public benefit, and we will show you what's in your portfolio and what kind of exposure you have and where you might be able to improve, and that can help you put you on the track to improving the areas that need it.
That's a really fabulous kind offer, Nancy. Thank you for that. So we will share the details about all that what you just mentioned through an email. So I think, yeah, let's proceed and see what resources you mentioned. Some resources, right? Let's look at them.
Yes. So I'm gonna
sort of follow-up question on that, Nancy.
Yeah.
So
absolutely.
I've never heard of ESG prior to today. So I'm curious to learn more about that and what sort of databases are out there for this. But it leads me to a larger question of, because I like transparency. New York is going to be putting, in buildings the score of like how the building itself is performing relative to carbon emissions. So I'm curious because, I'm in TD Ameritrade and I'm looking at the things that are listed on one of the, mutual funds that I have, which is, in that, fossilfuelfree.org website. And, I just see Morningstar risk return ratings. I don't see anything in there that's sort of like daylights, an equity piece or environmental. So I'm curious. And I do hear that there's some rumblings of new things coming into our 401ks in 2022. So I'm curious, like, what are the databases that are out there? Sort of which the best of breed for daylighting these things? And then sort of where is this coming in sort of the mainstream side of things?
Yeah. So I'm still looking for the right tools for our firm, because the big ones out there, Morningstar, which bought Sustainalytics, MSCI, I've had very detailed talks with them and many other providers, and they did not support my use case in aggregating this kind of data and being able to compare. I mean, I'm able to do this, but I have to put a lot of things together, and it's time consuming. We would have to spend a couple $1,000,000 a year to get access to the information we need. So that's where those firms are. They're going to send you to a professional. They're not going to make that information, free to you. However, MSCI does publish by company the implied temperature rise and the kind of the plan versus actual. We saw that at the very beginning of the presentation, and that will be one of the links in the support materials. But they have made that available for 2,900 companies. It's available for free for anyone. You can also get a Yahoo Finance premium subscription, and they give you some more information about the ESG data and how a company ranks among its peers. But ESG is open to interpretation, and different companies are using different data sets. Companies report, some other companies don't report. You can kind of guess, like, if they're not reporting, they're probably not reporting for a reason, right? And the standardization is a real issue. And like all issues in newer industries, it gets worked out, and they're coming to some agreements across different accounting groups about how they're gonna
So analogy here, right? Like it's same as our labels on our food products, like what's organic and what's natural. It is still being debated. So it is similar, but the scale is 1,000 times bigger because there's a lot of money involved here. So the ESG terms are still not really well defined. Well, one thing, David, is if you look at any ETF on ETF.com, the MSCI score is mentioned for every fund there, but it's just the top level score. It will not give you the details, which Nancy was talking about.
And MSCI is very generous.
Yeah, it is.
But their implied temperature rise is really interesting. It's also very interesting to see a company that has a AA ESG score that's above 3 degrees.
Right. Yeah.
Okay. And again, it's because they're graded on a curve. David, you mentioned you hadn't heard of ESG before. There are different forms of investing that fall within the sustainable umbrella. And I don't have a ton of time to go into each one of those, but the original concept was socially responsible. And think back, like 60s and 70s, divesting from sin stocks. You know, a lot of religious organizations did not want tobacco, firearms, etc. Socially responsible investing it's values based. It is, I do not want to invest in companies that do X. You know, I don't care what the financial impact is. It is a personal values decision, and that's a sustainability measure right there. You know, you are investing in the world that you want, the world that you want to live in. I mean, why do we invest? To create a better future. And so this is a qualitative investment. So they're socially responsible. There is a stigma there, and it is when people started divesting of tobacco. And in that time period, Philip Morris did really well financially. You know, they did a lot of other things that are not in society's best interests. However, people who had divested of tobacco, they had deviation from the index. They underperformed because they were missing this high performing category. And so there is a stigma that sustainable investments underperform. And if you hear that, I mean, that is left over from the 80s. And study after study, meta-study after meta-study has said that this is not the case. That companies that perform well on sustainability measures are doing, well, you know what? I'm just going to jump here. Reduces the cost of capital, so the cost of borrowing. And by the way, the fossil fuel industry is seeing this big time right now because all these banks and investors have pulled away from them for financing the expansion of fossil fuel capacity, which we absolutely don't need. You know, they're not getting the money to do that, so yay. 88% of those studies said that strong ESG is better for operational performance and stock price performance. But I wanted to go back.
Right, this was our repeat question. Like we had multiple people ask, so end of the day, this is about investing, right? And everybody's looking at the returns. Mm-hmm. So are the returns when I invest in environmental or sustainable companies, do the returns match the market, or are they better or bad? Was one of the questions we had.
So all of that research is showing that, you know, back-tested sustainable funds, sustainable investments did not performed as well as traditional investments, or unexamined, as we would say, and over the long term typically outperformed, which kind of makes sense because, you know, think about waste. You know, a lot about sustainability is waste, and waste is expensive. And so if you cut waste, you're cutting costs, and hey, that improves my profit margins, that improves my profitability, makes me more valuable. So yes, sustainable companies are also more protected against risks from, say, sudden, you know, regulation or, you know, weather catastrophes. Their business is less tied to, say, the availability of water. But so what we often see is like when the market dips, your more sustainable companies will dip less and recover faster. So
interesting. Yeah. So Nancy, time check. We are coming close to 4.
Yep.
So yeah, please continue with
Yes.
with your slides. But we have few questions that we would like to cover towards the end.
Okay, good. Well, you know what? So let me jump through. Let's see here. Well, let me show you this one. This is fossil. This one right here. This is the S&P 500 versus an index fund that is fossil fuel free.
Mm-hmm.
And as we see here, you know, they're tracking along. We're fossil free outperforming a bit. But again, that's the story. Performing as well as or better. And by the way, you know, fossil fuels are being replaced by a renewable, cleaner, better technology. You know, so here's the S&P 500 energy sector. Here is the clean energy index. Here's the regular S&P 500. So we can see, you know, big difference, clean energy and plain old energy, and then the S&P. So, I think we all know this. Fossil fuels, it's not our future. So let's talk about some of the resources that you can use to take a look at your mutual funds or to find new ones. USIF is a good place to go. The companies that are signatories to this, they have lots of sustainability mandates. This website has lots of education for you, but you can look up funds that have, you know, paid a good amount of money to pledge to meet their criteria. And, you know, when you look at fossilfreefunds.org, which we are about to do, you can see whether they have a sustainability mandate, and that's where that mandate comes from. And you don't see it we didn't see any when we looked at those D's and F's earlier. So here is fossilfreefunds.org. Fantastic website. So you can type in your funds and see how they score and get lots and lots of information about them. Or you can just choose that top scoring funds and take a look at funds and sort them in whatever way. You've got the fossil fuels, you've got financial performance and other issues, which would include things like deforestation, gender equality, firearms, all of these things. And they give you a great in-depth view of what this fund owns. And I mean, this page just scrolls down and down and down and down. This is a fund that that we use, and it is, you know, the fund managers are fantastic. They are very dedicated. You know, but you got to do, you know, you got to do your research. You can't just say, oh, it's, you know. And so this is a great place to start. Reading the prospectus is also very important. This is a fund that is fossil fuel free. It earns 5 globes from Morningstar, and it says in its objective, it's using ESG factors to identify risks and opportunities. And that brings us back to what ESG really is, because it's data, but it really is about risk and how risky is a company, how well positioned are they, when things happen in the future. So ESG is about the financials. We had the socially responsible that was about values, and then there was a smaller one that is about impact. And that's where, you know, when you want to drive change, you know, you're thinking kind of impact first alongside the return. So that all three of those ovals, that's how we approach sustainable investing. It is the combination of those things that's right for a client financially and for the objectives, you know, the future that they want. Yeah, these are some examples of, say, you know, an impact-oriented portfolio. So they're addressing system-level changes. They're not investing in those that are creating risk, fulfilling growing demand for products and services that transform how society prospers. This is an impact strategy. So we're winding down. Divestinvest.org is another fantastic website where you can see how the divestment movement has succeeded over the last 10 years. Read the report now. I highly recommend downloading it. And you see this Take the Pledge. I'm going to mention that in another minute. But so they cover so much, and I just gobbled it up. And I think it is a tremendous resource to learn more about the types of organizations and individuals, the commitments that they've made to divest of fossil fuels. So so far, 39.2 trillion has been diverted out of fossil fuels toward clean, renewable energy. And, you know, 58,000 individuals, 1,485 organizations. But those are just the groups that have registered at this site and taken the pledge. And take a look at the assets under management that, you know, in the last year. And they're recognizing that this isn't just about their values, this is also about risk. So here's the call to action. Hopefully we've done a good job, I've done a good job of presenting the case for sustainable investing and putting money where we need to put it to create the future that we want. And the number one threat to our existence is the burning of fossil fuels. So we're gonna provide this in the piece that goes out, but I'd ask you to take that pledge to divest and invest. Give them your name and the range of assets that you want to do it. They will send you all kinds of things to help you out. You can go to their website and download this report. Take the pledge, and when you take the pledge, and by the way, you know, you're just saying you're going to do this. You don't need to be ready tomorrow, but hey, you know, if not now, when? Take that pledge and then email GreenCell and let them know that you've taken that pledge. And optional, you know, hopefully you'll share this with them. It is optional, but the range of the assets, you know, they're pretty wide ranges, so that they can track this. Because again, you know, one person versus 100, wouldn't it be great to add those to your metrics for this next year? And then it's time to get started. And so these are some of the things that you can take advantage of, that analysis of your portfolio. You can download a bunch of resources that I've put together. If you're interested in attending a how-to webinar, I will do one of those. And if you have a financial advisor, don't ask them about this, tell them. Tell them that you want to do this and why. And if they waffle or blah, 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 you might need a new advisor. I have a good questionnaire that helps you evaluate whether or not they know what they're talking about. And then in 90 days, GreenCell is going to do a progress update. And I am so excited to see how you do. And hopefully you can celebrate, and then you can move on to expanding your influence by encouraging others, and talking to your employer about adding sustainable funds to your retirement plan. As you know, change starts with you.
So this was fantastic, Nancy. This was fantastic. Thank you.
Thank you.
So as Nancy said, we will be sending out an email to all the registered participants. There will be a survey form in that where you will have the option of specifying whether you want a free resource guide or you want to attend another webinar about how to dive in and understand the details of how to shift your portfolio. And as Nancy earlier mentioned, her company is offering all the participants a free portfolio review. So if anybody wants to get that review done, you could also check a box there and they will reach out to you. So all this will come to you through emails. And as we are collecting our questions, Nancy, can I take the share back?
Absolutely.
Yeah, thank you. So as our volunteers go through a last time for going through the questions, in the meanwhile, Nancy, I had one question for you, right?
Mm-hmm.
This is, say somebody decides, makes up their mind and they want to switch and they approach you. Mm-hmm. What happens after that? Like, what's the process after that?
Mm-hmm. So very often it will start with that, portfolio analysis. Although sometimes folks just know that they don't like what's in it and they want to learn, what this means to us and how we do it. Most of the time when they come to us, they know why, but they want to learn what our approach is and what we would recommend for them. And that's a it's a two-way conversation. It's, hey, do you like us? Do you trust us? Because we are a full service financial advisor, so we can help with planning. We do the things that a good financial advisor does, but where the traditional financial advisor stops at, okay, yes, here's your risk tolerance and here's your, here's your cash flow statement. Here's your portfolio. Uh-huh. Well, we do the cash flow, we do the risk tolerance, and then we say, let's talk about the sustainable development goals. Okay. Let's talk about what's important to you. What do you want to invest in? And that can be a really deep conversation. And we put together an investment policy statement that reflects that. And really then the next step is usually people want to see what we would recommend for their portfolio. So that's a second meeting where we actually go through and say, all right, here's where you are and here's what we would recommend. And different accounts, and sometimes it gets very complicated and sometimes it's easier, and send them some documentation, and if they like it and want to do it, you sign a client agreement. And by the way, you do not write a check to your financial advisor. You don't wire them money. What you do is you give us the ability to trade your account on your behalf, but your money is staying at a custodian. And the custodians we work with are TD Ameritrade and Schwab. So if you have money there, then it's even easier.
Yeah. So Nancy, it's 4:10. I looked at the questions. There is one. If you can take one more question, I would like to ask one more.
Mm-hmm. Yes, I'll stick around as long as you guys want.
Sure, thank you. So the question, Nancy, is there are some folks who are do-it-yourself kind of folks, right? They manage their own funds, invest on their own. So for somebody who is in a simple portfolio kind of situation where they are in a 2-fund or a 3-fund kind of portfolio, and they decide to switch, like if they want to get out of S&P 500 or if they want to get out of the total market fund, is there a fund or a list of funds that you would recommend for either environmental investing or ESG kind of investing?
So that's a slightly more complex question. If someone has a couple of funds, the first thing we would say is the most important concept in investing is diversification. And you should be well diversified. And, if you're in an S&P 500 fund and the total stock market fund and one other fund, that's not fully diversified. S&P 500 is a sliver of the large blend category. When we saw that pie, the S&P 500 would, so S&P 500 returns are not a benchmark that anyone should be measuring against unless the only thing you own is the S&P 500 and you've owned it for the exact same time period and not traded. But there are lots of sustainable fossil fuel free ETFs. You do want to do your research to look at how they're making, how they're tracking that benchmark, because as we saw on the S&P 500 ones, they had different fossil fuel exposures. So, what are they doing differently? Fossilfreefunds.org is a great place to start. And that's the short answer.
Yep.
But yes, if you're doing it yourself, you clearly enjoy it. And so think about this as just another, set of data to research and check out and learn.
Right. Yeah. Yeah. So Nancy, thank you. Thank you for all the insights today. Folks who are on the call, if anybody wants to come on video and have a conversation with Nancy or have a question, please, you are welcome to join now. But before we go, our volunteers on the chat will be sending out a link for a 1-minute survey. Please do fill out the survey. Your feedback helps us improve and have better webinars. So please do fill that out. If you are interested in joining us in our projects, you can volunteer for some of these projects that we have. We have started a few new initiatives this year. Like if you are learning composting or you want to learn how to recycle right, let us know. We have a group of mentors who can help you do these things. So if you are interested in any one of these, please do let us know. Again, thank you for joining today, spending your Sunday afternoon with us. I hope this webinar gave you a new perspective. It helped you learn few things. Nancy, you did amazing. This was like I learned a lot of things. This was eye-opening for me on on many aspects. So thank you for that. And again, if somebody wants to has questions or wants to discuss something with Nancy, she's kind enough to stay on for a few more minutes. Please do jump in.
Hi, this is Anita Pai. I work for BlackRock. ESG is a term which I've been hearing about, though I'm on the program management side. So when we talk about ESG in BlackRock, I think we try to put a score, and then we have the score per pillar, like how important E pillar as an environment, or S as in social, as in or governance. How are those weights important when we decide how to invest? That's my question.
So we would call that materiality, and what is most material for a business. So a service business is not going to have the same kind of carbon footprint. Well, I don't want to say carbon footprint. They are not going to be. They're not manufacturing anything. They're not polluting in the same way. It's a people-driven business. And so what's material in ESG for them is more likely to be social and governance, how they treat their employees, how they pay their employees, how they run the company, transparency, gender equality, all of those things. But the things that are material for a company, are material for the industry. So once again, they're being graded on a curve, but that's a reason why you can't compare, say, a service business with a massive retailer. Yeah. It's, not apples to apples. Is that?
Yeah, I think I get it.
Great to have someone from BlackRock. I hope I conveyed all of the things that you guys are doing well.
Yes. And that's one of the reasons I still stick with the firm, because they have a huge vested interest in not only green efforts, but even green investing. And sustainability, ESG is big, really big. Yeah.
Yes. And you made huge strides this past year.
Yep. Yeah. In the right direction.
Yes. Very pleased.
Yeah.
Okay. Does anyone else have a question or anything you want to talk about?
I have one last one for you, Nancy. Sorry for asking so many questions.
No, please. It would be boring if I were just sitting here, twiddling my thumbs.
I know that I probably have not done the right thing in terms of making my portfolio now diverse, but divested. Because one of the things that I've seen over the last several years is target dates for mutual funds, which get you that diversity. My question is, for those, is there a simple resource for understanding how those are rated in terms of their carbon footprint, the funds within them, if they are, have sustainable action plans? I think the answer is probably an Excel spreadsheet in my future of, expanding one of those target funds to see what is it made up of, and then doing the research of all those individual funds. But I'm curious, is there like a resource you could say Parnassus Core Equity, that's what I switched everything except for my Apple stock over to.
Okay.
But
by the way, core equity is when it says core, it does mean it is diversified. It might not be fully diversified, but it is solidly diversified.
Oh yeah. I know it's sort of a mixture of various sectors. It's not all in one. It's not an S&P 500 only. But I'm curious because if I switch over to our office's 401k, there it's just a range. I could switch it to be able to choose other investments, but we have just target date. So I'm curious with those sort of target date funds, if there's a resource to be able to daylight how that is performing beyond financial performance.
So I'm looking over here at this screen at my download of every fund in fossilfreefunds.org. If you just use no criteria and ask to download it, you can download the whole thing. I believe that they have target date funds in here. Let's see.
There is, Nancy, there is one aspect though, right? So for target date funds, so when a organization sets up 401k, they go to a vendor like Fidelity, Vanguard, or somebody, and they say, we want to set up a target dated fund. The company that they go to gives them some options, and they create a fund out of 10 investments or something. So what ends up happening is every company that has a target dated fund in their lineup, in their retirement lineup, will have different sets of investments. Because, and I have even seen some target dated funds which are a mix of, there are 3 funds from Vanguard and 2 from JP Morgan and 2 from Fidelity. So it becomes really difficult to calculate those scores, because unless you go and rate out each individual investment in that fund, it becomes like you'll have to do it on your own. I don't think there is a resource that would give that information offhand to you.
Well, so actually, there are standard target date funds, and here are Vanguard's 2030, 2035, 40, 45, 50, 55, 60, and 65. So,
so if your company has one of those standard funds which was pre-built and there is no modification, then you are lucky and you can get that score out. But otherwise, it would be a self-service calculation kind of thing.
Yes. By the way,
I think that's what I found when I looked for the Fidelity target date.
Let me see Fidelity. Fidelity target. No items match my search. Well, here are American funds target date. I am, no, there are no Fidelity. In here.
Just plugged in the.
So that may be one of those custom funds that Pankaj is talking about.
Spreadsheet.
So good luck finding out what's in there.
Well, I think that they do list, like, I think with Fidelity, it was like all Fidelity funds that they had in there. So you can, I believe it listed out specifically which ones were within. So at least with Fidelity.
Yeah. Yep.
It's been a year since I looked at it, but that's my recollection.
Well, you could look them up in here. And by the way, I mean, the amount of data, if you download the spreadsheet, so let's see, there are, I mean, we've got, all kinds of returns data, but we've got things like, I hid a lot of these things: fossil fuel holdings, the percentage, the dollar amount, carbon intensity, carbon footprint. They've got the number of companies in, where did that go? Oh, you know what? It's not in this version. I cut those. There is more data than, even the biggest data hound would want. So, you can really, and by the way, you can use that to make a case to your company for adding some sustainable funds to your retirement plan. And fossil free. So if you go to investyourvalues.org, that's also an As You Sow company. They're the ones who created fossil free funds. They have an entire section devoted to, first of all, they've got the retirement plans and grades of a lot of large companies. And you can get notified when your company is on there. And then, but it has a whole toolkit with all of the, the data that shows, millennials, investing sustainably is important to 96% of them. 80% of them believe that investing sustainably helps to fight climate change. More people engage, like actually invest in their 401k account rather than just letting it go to the default target date. They get more engaged when there are sustainable funds in there. And that actually has an impact on employee turnover, which is an S in the ESG. That's one of the metrics, but there are just so many, and it increases participation across the board. So any company that argues against putting a sustainable fund in is probably not. Well, I don't want to say they're not a company but yeah, there are many good arguments. Let's not say arguments, reasons that they benefit from doing so.
Thank you.
That I think that's a good takeaway for everybody who is working in a corporate setup where you can put in a request if there is no sustainable option in one of your because most of your investments and savings, a big chunk of it is through your company's retirement plans. So I think each one of us should start sending those emails out asking for a sustainable option in your 401k if it is not there.
Yeah. And by the way, on As You Sow, and there's another, Divest Invest also has a great section, but they talk about organizing, rather than an email here and there. It's getting a group together to. More the number behind it. It works better if you have support of a group. Yeah. Yep.
Okay. Excellent. So Nancy, thank you.
Thank you
for this amazing session. Thank you for hanging out and answering our questions. This was really informational. Lot of things to learn. So thank you for that.
You're welcome. And if anyone just has a question, large or small, and you want to email me, or call me, I am always happy to help out. Even if if you think it's way out of left field, it's probably not. So
Nancy, is it okay if we send out your contact information with
absolutely.
Okay.
My email too is nancy@brighter-investing.com, because someone's squatting on the non-dash version and doing nothing with it. Has owned it for 15 years, not planning to do anything. I will actually stick that in the chat too.
Yes, thank you.
Yes.
Okay, so yeah, let's wrap up on that note. So thank you everybody for joining. We will see you next time in our next webinar. This was a excellent interactive session. So thank you everybody. Thank you, Nancy. All the volunteers behind the scenes, thank you. Bye.
Yeah, good job.
Thank you.
Yes.
Bye.
Well done. Thank you, everyone. Bye.
Thank you. Bye.